there is one stock that is about to break out, in my opinion. It is a refinery stock, so oil, renewables. They're in Houston, Texas, so the heart of energy. They're not connected to Tesla. They're not connected to any of the power play Mag 7 stocks or to Nvidia directly. Of course, every massive multi-billion-dollar company does need energy, but this is more of an off the beaten path hidden gem stock releasing earnings on November 4th. So there's a little bit of time to get into this technical setup that I think looks absolutely excellent. If you stay to this end of this video, I'll tell you about the $1,000 guarantee. This is not financial advice. Let's get going.
This is Sam Putnam.
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 So this is the stock we're comping about. Par Pacific is the company we are talking about, and this is the chart. So basing sideways for a long time, coming over this left side peak in July, and look at the strength today. And if you're wondering why that's so notable, besides it looking like it is notable regardless of context, look at the SPY today. Okay, the market's selling off, Par Pacific showing strength. Someone is buying, accumulating the stock, and there's a great level to risk off of this $36 all the way back to July. So that's the opportunity on a 5-year. We're also coming up to an important level, and that's pretty much the most important spot to look at because all-time highs is in the foreground on the horizon. Not a mirage. This is the earnings on November 4th, so there's enough time before earnings to get in the stock. Look for a move up to 39 on a $30 stock. That's significant, 10% or so, risking a few percent or less, and big opportunity with a very low risk is a total green light. Now, let's talk about this company earnings wise. 50 million is not a lot. Okay, 60 million, but it is a lot compared to a year ago, more than double. So EBITDA for the second quarter was over 100 million, and they did a share repurchase of 30 million. So they didn't come out with some statement that they were authorizing a share repurchase. They actually did one. So that's a major boost in terms of credibility for this company. And while these other power-related companies, GEV, VRT, VST, sort of connected to data centers as well, are selling off a little bit, par is on renewable fuels production, whereas these companies are very connected to the data centers that Meta and Amazon and Nvidia are all relying on. These Mag 7 companies are actually doing pretty well. This is a pretty good looking chart for the Mag 7. So I didn't mention Google, which is also doing great. Apple just reached its all-time high coming into earnings in about a week. So it's hard to say that, Microsoft as well, that these companies are not going to do well in the long run, GEV, etc. But in terms of power companies, I think this tiny power company out of Houston is the play right now. And I'm going to jump into a little more about Par Pacific as far as recent news goes. So these are their peers, and one notable peer as well is this DK. They also operate refineries in the southeastern US, and this is a chart that also looks very interesting. Okay, surfing this moving average, very tight days, And it's just unheard of to see a flag this beautiful with such a good risk on a company so big at a time when a lot of companies are chopping around, because the SPY dropped so much last Friday when Trump and China's dictator president had a bit of a back and forth exchange over Twitter about rare earths and tariffs. So I think if you want a faster mover, PARR is probably the move. The volume's drying up, means there isn't much selling. I think it's peer doing so well, and it does move well over the last 10 days, but DK is another one that is actually similar, even though I don't know what I just said or if I said it backwards, but this volume is drying up as well coming into this start of a breakout. You're kind of chasing here, in my opinion, and this is not a ton of liquidity, right? 1 million or 2 million shares per day on a $30 stock. It's pretty similar to PARR, but it's kind of like this looks pretty strong. And if we look at DK, it almost seems kind of extended if you look at it on a weekly basis. So pick your poison, I guess, but I have to think that the stock that hasn't broken out is the one to talk about, which is the whole purpose of making these videos. Now, Par Pacific Holdings is also related to the Pacific Northwest and Hawaii. So they operate fuel retail outlets, aka basically gas stations, it sounds like, as well as refineries with 200,000 plus barrels per day of capacity. They process crude oil, not just renewable fuels. If you actually look at oil right now, the price is up. That's good for them. I don't know if that's gonna, maintain or not, but it definitely doesn't hurt. So I can't really think of a better company to buy in the oil sector right now. Having some connection to renewable energy is sort of a given on any of these companies. And they took an equity stake in this renewable energy company in Hawaii for $100 million recently. So that's why there's so many mentions of Hawaii in this description. But if we're being super real here, I don't know a ton about what this company does fundamentally. I just know that if you look across the market today, what you're basically going to find is very few companies doing well compared to the market itself, and a lot of companies selling off. Nvidia, no exception, okay? It's just unheard of to see the SPY selling off this much and to see a company holding up with, this is, I don't know what you call this, 5+%. And it's not like it was a company that recently had earnings like GM that, of course, there are massive moves up on earnings when there's new information coming into the market. Intuitive Surgical also having a big move, giving some of it back. Galaxy, the hedge fund holding company, having a big move and then giving some back on today's move. Actually, they sold off a lot on the actual day that they had the big move. The move that I'm talking about happened in pre-market. So it seemed like there were some opportunities to buy these companies on earnings results. And what I like to do, and what has proven out to be a good move, is to wait for the bar to close. So if you bought this right as it opened, well, you were in trouble. And if you held it today as well, suddenly you're down another, I don't know what this is, but it's a lot, 15-20% down depending on when you bought it. So I'm super into the technicals. I think GM is offering that for you. Tesla is not, even though they beat on revenue, they did not beat on earnings per share. This DK looks great, but it's not easy to buy a company that's in a channel, even though it looks so picture perfect recently, given the market chop. So by process of elimination, that leaves Par Pacific. That's the reasoning. It doesn't hurt that oil's up and it's in that sector. And if you like these ideas, hit that like button. If you want to see more, hit that subscribe button on YouTube. And if you want to make $1,000 in stocks in 90 days or your money back, head over to stockscommunity.com. You'll see how I can make that guarantee. You must have more than $25,000 to invest, which you need anyway to make more than 3 investments in a 5-day period to be able to open and close them if you live in the US. That is my guarantee to you, and I hope you take advantage of it because I want to make you successful in the financial markets. This is not financial advice, but I'll see you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.